We will talk about the implications for investors in both companies with big moves in both of those stocks today. But first, let's get to the market action with our panel. Adam Crisafulli of Vital Knowledge and Courtney Garcia of Payne Capital Management and a CNBC contributor. Adam, I'll go to you first. I mean, we closed at session highs here, and it was strong across the board, but really tech led the way yet again. What does that tell us?
Yeah, it looks like tech confidence is rebounding a little bit after the pretty aggressive slump at the end of July, early August. Broader market confidence is rebuilding. You had the initial shock with the BOJ hike and then that July jobs report. I think there's a little bit less concern about an imminent recession. We've had some decent economic numbers. We had another favorable inflation figure this morning. We're coming up on a couple of catalysts from the Fed that should be dovish, including next week's big Jackson Hole conference. And then in September, we're very, very likely to get a rate cut. The debate now is if it's 25 or 50 basis points. So, we're coming up on a very busy July earnings season. We got the first one this morning with Home Depot, which wasn't terrific. Stock initially saw selling, but rebounded. You can argue either way of the bull-bear argument on that one. But we're going to hear from a lot of other retailers, including Walmart Thursday morning, and then a bunch of tech companies with Cisco starting things off Wednesday night. So, it's going to be a very busy August for tech earnings, and that's going to really play a big role in what happens next.
A lot for us to cover, especially here in overtime. Courtney, I want to get your thoughts here. The S&P 500 settling. It looks like up about 1.7%, 54.34 it looks like where we're shaken out here. Range bound, or are you looking for a certain catalyst that breaks us out?
Yeah, I think the good news is after we saw those first couple days of August where the markets had a lot of that volatility to the downside, that's recovered pretty quickly here, which I think is a good sign that a lot of that was likely due to that yen carry trade unwind, as opposed to data showing that the economy is going down, because that obviously would be a much worse thing for the markets going forward. So assuming we continue to get positive data, which we did with PPI today, I think all eyes are going to be on CPI tomorrow, and then we also need to get those retail sales out. But if all of that does come in to show that inflation does continue to moderate and the Fed is more and more likely to lower interest rates, that all is going to be a positive for the stock markets. So seasonally, August, September don't tend to do a whole lot in the stock markets, but later in the year, especially if rates come down, could mean a lot of that cash starts to come out of money markets if they're not paying that 5% any longer and making their way back into the markets, which could mean a further upside. So absolutely, we're optimistic here, and you want to take all of these as buying opportunities.
Adam, Bespoke today putting out a note saying historically the S&P 500's best returns have followed periods where the VIX experienced extreme weekly moves at either end of the spectrum, be it gains or losses. We saw that happen, obviously, last week, and the subsequent flush out in stocks and other asset classes. What's going to matter more here? That consumer data, that labor data, those retail earnings, or is it going to be tech and AI, which has led so much of the market, at least for the first half of the year?
I think it's going to be a little of everything. Like I think Courtney said, you saw the volatility, but we haven't really seen fundamental data confirm the market slump, and that's why you've had this rebound. So, we are definitely seeing data slow. It's not collapsing. It's not recessionary. We continue to see disinflation and outright deflation in certain categories. So, and corporate America, as we come through the calendar Q2 season, earnings came in ahead of expectations thanks to aggressive cost cutting. The magnitude of upside wasn't as large as it used to be, as it was in prior quarters. And revenue is certainly encountering some headwinds. So there certainly are fundamental difficulties. But the narrative a couple of weeks ago in the beginning of August, when stocks were really witnessing some aggressive selling pressure, it hasn't really been borne out by fundamental information. If that continues, where corporate America continues to kind of fight through this more difficult environment, and we stay on a glide path to Fed easing, I think that's going to help provide tailwind for equity prices. But all of those catalysts you mentioned are going to be very important. So upcoming labor numbers, CPI tomorrow, and then the July end earnings, especially for tech. It's a very busy tech earnings season for July end companies. So Cisco tomorrow, AMAT Thursday, NVIDIA, Salesforce, Dell later in August. Those are all going to be crucial catalysts.
Courtney, can we confidently say the inflation foe has been vanquished here? I know we're awaiting CPI tomorrow, but you look at softer PPI prints today. Certainly the market is pricing in much more from the Fed come September and beyond.
Yeah, I mean, it's largely getting priced in at this point that rates are coming down because, I don't want to say it's a foregone conclusion, but most people are assuming that inflation is under wraps at this point in time. Longer term, I think, is the question, right? I mean, even if rates come down, I don't think they're going to come down to the levels that they were at in the previous decade. And I think that's something we need to look at as investors, is making sure that, yes, if rates come down, that's absolutely going to be a short-term positive for the stock market, but long-term, they might still stay at elevated rates. And so that's something, too, when you want to look at things like talking about the Magnificent Seven, and all of our AI companies have been doing so well. But if we are in this environment where rates are going to be a little higher for longer, you want to make sure that you are staying positioned and really well diversified here. So if we take out the Magnificent Seven, look at the S&P 493, earnings growth is expected to come down about 3.8% this quarter, and then grow next quarter to close to 13%. And that's where you want to look at what's not happening today, but tomorrow. And outside of that AI trade, I think there's a lot of opportunities here.